Welcome to the indices, and here we're looking at the Dow Jones, the US 30 on a daily chart, and just simply to point out that this market's at the medium level here, which is a 16,500, and a breach of this old high here would put this market into a bullish mode. So that's something to look out for. The Feds have made a comment that the economy needs supporting, so obviously they will continue their bond buying, and that's moved the markets up somewhat. And looking at the S&P 500 here, it's still not basically there's about 3 different wave counts for this particular pattern. Look, first of all, I know it's corrective. Secondly, it can fall lower from these highs here, so it's something that we need to be aware of in terms of an A wave down to here, a B wave over to here, and then a C wave moving down through here. And this internal count would be an A wave, a B wave, and a C wave in 5 waves here, and that would suit quite well actually. So it can fail from this point here. So it's just important that we just don't get on our high horses and buy a lot of hope at this point here. We would need to see a little bit more evidence of a move up, and if it was going to move up, this move here appears to be in 5 waves. So after 5 waves, as you know, there's always a 3-wave counter trend. So if that's the case, then we get this counter trend here, and then we get support here, then by all means, go along off the 1872 at that point there. So just with that in mind, just drilling into here, looking at this structure moving up from the last low here, it can be counted as a 1 and 2, and then 5 little waves in here for the 3rd wave, the 4th wave, and then the 5th wave into this area here. So the A, the B, and the C, we come back. This is the 50 and the 61.8 retracement level coming into 1855 area through here, covering a little gap through here as well. So look, let's just see how that pans out. After that, if we get support back up through here, then by all means we'd be going long at that stage. But also, just as I mentioned with the DJ as well, the Dow Jones, this a breach above the 16,500 here would do the trick as well, and that would get the US indices on their way. We already know that the stock 50, the top 50 stocks in the Eurozone are moving higher, and and sort of leading the way up really. So it's all good. Yesterday we were talking about the markets being very oversold overbought at 96, and we'd expect a correction to come into play, and that correction is now coming into play here, and the momentum still to the upside quite strongly, but just short-term oversold here. So let's just wait for development of a larger correctional pattern through here before we look to the buying side. The FTSE, I just want to drill in on the 15-minute chart here just to keep it simple. And in terms of keeping it simple, it would be a long trade if the 6630 became the retested support. So that's something to look for. When we spoke last time, we were looking for a larger pattern to occur across the 66 here. And if that's going to be the case and that's the end of it, then support on top of 6630 would be the trigger to go long. So you'll need to see a move up like that here, and then come back and retest it, and then put the line across the top there, and if the market moves up through that line, that's a trigger to go along from that point. Otherwise, if we don't get support here, then we're just going to be looking at a larger correction here, and that would certainly be on the cards too if the US were going to pull back, and obviously the DAX is pulling back as well. The Australian market here, one of the main points here is that well, there's conflicting situations, and this from this low here, this move up through here is in 3 clear waves here. So it does make all of this, the whole thing, corrective. There is a possibility that we could put this here as wave 1 through to here, and wave 2 to here, and then a wave 1 to here, and a wave 2 to here, and it's a larger trend building to the upside. Now that's possible, but we won't just play with that just yet, but it's there, but we just should be a little bit conservative and work through what we've got here. If this is going to be an A wave, a B wave, and a C wave here, this will be the sort of ending of it over here. This would be clearly wave 1 here and wave 2 here. Wave 3, it appears to be 1, 2, 3, 4 here that's not finished, and then 5 here for the third wave, then the fourth, then the fifth. Also, this little move here, as you can see, coming down through here, it's actually in 5 waves. So if we get 5 waves there, we'll get 5 waves over here. If I just got that on a clearer picture here, yeah, we do here. See, from this high here, we've got 1, 2, 3, 4, and 5 here, so it makes this sort of correct. So there can be a bit of profit taking occurring here in terms of an A wave, a B wave, and a C wave here before we see any upside. And that would also suit the bullish weekly cycle, where Tuesday morning is a bit of profit taking, and then the trend resumes in the afternoon. We've got a couple of important announcements coming out for well, 2 of them from China. One's the manufacturing figures, and the other one is manufacturing figures too. The first one's at 12 o'clock and the next one's at 12:45. I think I need to check that, but it's written in the text report. And also we got the cash rate today as well at 2:30. So, you know, there's going to be a bit of jumping around today. All good. But, you know, on the positive side of all of this as well, in terms of moving up through here even further, I look back to the finance sector. Well, I could look at the banking sector or the finance sector, but we've just been focused on CBA, and, you know, we've been looking at it each day, and we understood that this particular move through here is likely to be an A wave, a B wave, and a C wave as a correctional move, and that can be completed. And if that's the case, then we'll be looking for 5 waves up through here, and they would look something like this here, 1 to 2 in there, 3, 4, 5 up through this way here. So that's what we're looking at, and we're looking at the third wave now. And as you can see, it's really sort of chuffing along there quite nicely. So it's really got the personality of a third wave there as well. So obviously it can fold back a little bit and all the rest of it, but it's sort of on track for moving higher there nicely. Obviously the material sector is well, we only need to look at BHP really, don't we? So in looking at BHP here, the same as the material sector, yes, there is support off the bottom here and it can bounce up, but it's not leading to the upside like the finance sector. So this is the drag, the 2 extremes of it all. So, but obviously buying on lows is a bit tempting now and again, but yeah, just got to have a look at the base metals, and they're not that strong. They have been rallying a little bit, but that rally that copper's been making is also corrective as well. So these can also fail from these points as well, or even a bit higher really. But you know, the 61.8 retracement level, so to speak, coming here and looking in 3 waves here as such. So. And then down from that point. Okay, well, that's that. In terms of actually sort of trading this here, you know, there is the case that the 5 waves can be finished here as well. In terms of, I don't think it's the case, but if I just move that there, the third wave to here, the 4th wave to here, and this is a viable case here, and then we've got 5 waves down here, so it would be down for 1, back for 2, and down for 3. So in terms of trading this here, let's just drill in here a little bit. Look, whatever happens here doesn't matter. If the 5400 develops as some sort of support here early in the piece, then you can go along from this point here and get yourself up to, depending on where you trade, the 5430. There's a lot of supply that comes in around this point too, above the 54 to 5430, and historically going back over here, you'll see a lot of price action over there that is you know, that's really going to sort of peg this high through here. Okay, well, that's it. So just tread lightly in this point. Cheers.